Good day, ladies and gentlemen, and welcome to the Somany Ceramics Limited Q1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the management's opening remarks. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Naveen Agarwal, Head, Institutional Equities at SKP Securities Limited. Thank you, and over to you, sir.
Good afternoon, ladies and gentlemen. On behalf of Somany Ceramics Limited and all of us at SKP Securities, it's my pleasure to welcome you to this financial results conference call. We have with us Mr. Abhishek Somany, Managing Director, along with Mr. Sumit Kumar, AGM Finance. We'll have the opening remarks from Mr. Somany, followed by the Q&A session. Thank you, and over to you, Mr. Somany.
Thank you so much. Welcome, ladies and gentlemen, for the earnings call of Q1 FY23. As you can see, our sales have grown by about 67% over last year, and in volume terms, we've grown at about 43%. The EBITDAs and the other numbers are really not comparable to last year first quarter, because last year first quarter was an aberration, so everything looking much higher. But just to take you through, our EBITDA was 37 crores and our PAT stood at 24 at 4.5%, and consolidated was at 45 crores EBITDA, which is the right figure to see because we have a large interest in joint ventures, and the PAT was 3.7%. It has been a quarter of a lot of pressures in terms of input costs, especially in terms of gas. We have been able to hold our prices, the price increases which we had taken. But at the joint venture level, obviously the prices went up of gas and the pass-on did not happen there, and they were not able to increase the prices. So therefore, you see the difference between the standalone and consolidated. But the good news is that the gas prices seem to have stabilized in the last 1 month, and the scenario which we are hearing and seeing is that mostly the gas prices should be stabilized going forward, at least until we have any new surprises, which is something else in terms of the war. As far as the northern gas price is concerned, we will have a small increase even now in September because that's on a 3-month moving average. But that also, with the Brent now down, should start evening out and in fact going down by the mid of next quarter. All our plants which we had expanded capacity in started. They were obviously delayed. I had mentioned that on the call last quarter, which was because of the gas non-availability, but now they are all on stream. The last plant started in June. We have done many launches. We've done 6 launches since June end till 2 days ago in Delhi for all the 3 plants. The northern plant is fully sold out. The south plant is also coming on stream, and it should be at 100% capacity utilization in this quarter. And so will our west plant, which is the Kadi plant for GVT. In all the plants, the plant started with the non-value added product, and now we've done launches for the value added product also. So you should see a lot of benefit from the value added products growing in both those plants. As you can see, the GVT segment moved up from 26 to 30%. Last year was 26% in the same quarter, has moved up to 30%. And I think this would move up by another 2-3% within the next quarter, within this quarter and the next quarter. The average capacity utilization in Q1 has been approximately 85% in tiles and 88% in sanitary ware and close to 95% in the faucet segment. The brand spends have been in line with what we generally do. First quarter is slightly lower than the other quarters. The next dealer addition has been approximately 70 dealers, and we've otherwise planned to add approximately 300 dealers in this year. There have also been additions on our exclusive showrooms, so that is going well. The price increase is in mid-April and then mid-June were approximately 2.5 to 3%. Our guidance which we had given for the year looks to be still absolutely on site, which is high double-digit growth between around the 20% mark. So we should be able to maintain that. Yes, there is a surprise which is coming up. The Morbi industry, there seems to be some announcement of a week, 10 days of a trucker strike. But hopefully that doesn't happen. We would know that by the 15th, 16th of, in the next 3-4 days, 15th, 16th of August. But even if that happens, we should be able to make up at least some of it. It cannot be a very long strike. So that is also something which we've heard. But otherwise, things looking absolutely good and steady for this quarter. We've done a lot of work on the value-added segments. We've done a lot of work on new product launches. We've done a lot of work on channel expansion. On the balance sheet front, things are looking good. Our debtor levels went down even more. And the stock has gone up a very small bit, but that again gets evened out towards the H1. Overall, personal reaction to the figures, obviously it's been a challenging quarter. We could have done slightly better. And I think this quarter you will see a decent increase both in terms of sales and both in terms of margin. So we're looking good, and that is subject to no serious grass increase, which doesn't seem to be the situation going forward as we speak. So overall, things looking good. We had announced the plant for Max, Somany Max for the slab plant. That is also the machinery has been ordered, and we should have production by the end of Q1, early Q2 of next year. So that's also absolutely on progress. One more announcement is that in the faucet plant, we've done some balancing equipment, and that faucet plant will double capacity from the early part of the third quarter, which means by October, that would have doubled capacity, which would give us some increased margin and also more sales. So on the sanitary ware front also, things are looking decent, and we should be able to give you the growth which was envisaged and promised at the beginning of the year. So overall, things are challenging, but we seem to be in a decent position. Volume is coming through, and we are trying to catch more and more volume geographically, more in the north and more in the south. So we're trying to get more volume what we have missed out in the last year. We're trying to get ourselves to sign up more volume in these areas. Of course, there are not too many plants available, but whatever we are able to get our hands on, we're trying to get that capacity on stream. So this is the highlights for our Q1. Q2 looks good. It's been a decent start in July. Obviously slow because of the June pressure. June onwards, the market has been slow, but on an overall basis, it's not been as bad as we would have expected it to be. So looking good. Other than that, I would open the floor to Q&As. Thank you so much.
Thank you very much. We will now begin the question and answer session. Each participant is requested to limit himself or herself to a maximum of 2 questions. Time permitting, we shall revert for any further questions that you may have which remain unanswered. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vineet Shah from Shah Group. Please go ahead.
I have a question related to EBITDA margin for the Somany. So I want to basically ask, as Kajaria competitor is having a EBITDA margin of 15, and we are almost close to half of that, 8 as of now. So what are what are we basically doing to have close the gap between this?
Erosion between his and ours is more or less in the same lines from quarter on quarter. What we're doing to bridge it is, obviously there are a host of things, but the immediate key points are the value-added sales and also increasing the GVT percentage of our total portfolio.
Okay.
Thank you.
Thank you. The next question is from the line of Sneha Talreja from Edelweiss Securities. Please go ahead.
Hi, good evening, sir, and congratulations on great set of numbers. Just two questions from my end. Firstly, related to, the volumes. So now that Morbi is about to see, 1 month of shutdown, any impact that is likely for your volumes? Any difficulty in facing outsourcing material, or can that be, smoothened out with respect to inventory levels?
So first of all, Morbi shutting, that doesn't shut down our plants because we're in the organized sector in Morbi. The worry is not the shutdown of the Morbi. In fact, that would be a good one for us if Morbi shuts down. That should increase certain demand. But what we're worried is that with Morbi shutting down, I believe there are also rumors of 10-day, 12-day transport shutdown. If that happens, then that'll affect us for those number of days. But let's see. I mean, we've had this in the past also, and transport strike never lasts more than 3-4 days. So we're hoping for the same. But as far as our joint ventures are concerned, 100% of them are running, and we have already not consented to this mass shutdown of Morbi. So to that extent, whether it is ours or other industries who have joint ventures there, and even the larger slab plants and the export plants are all running. So the whole Morbi, I believe, is approximately 800 plants, out of which 60 to 80 plants are going to keep running, provided the lorries are available for dispatch, because you can't keep more than a certain amount of stock any which ways.
So no worries with respect to your outsourcing partners as well, as what I meant.
No. So we have stock there, so that's also not an issue. And anyway, our reliance after these our 3 expansions have come up. Most of our reliance is on joint ventures and not so much on outsourcing. And whatever little was there on outsourcing, we have a reasonable amount of stock over there.
Perfect. Just also wanted to get clarity on your working capital.
But those are not to be majorly highlighted. I mean, our joint ventures keep running, we're good to go.
Sure, got it, sir. So my second question was related to your working capital days. Just wanted to understand how is the calculation made with respect to this 45 and 46 days, if at all, you could specify, maybe Sunil sir can take it up and, just specify this point, that how is the calculation done on this 45 and 46 days? And what is the reason for, sudden increase that you are seeing in terms of tables, or I think inventory is what I see.
Yes, hi. So that's a fairly simple calculation. I think we have explained that working as well on the slide itself, that it's purely the business working capital requirement, which comprises the stock and book debts on the current asset part, and on the current liability side, the trade payable things is being considered. However, the cash surplus, which is not yielding any kind of return to business, is not considered as far as current asset is concerned. At the same time, capital creditors are not considered. So otherwise, it's a fairly simple, the current assets and current liabilities adjusted by these 2-3 things: the cash balance, the capital creditor, and the short-term borrowings.
Okay, understood. I'll take that calculation separately also with you, sir. Thanks, sir.
Sure.
And all the best.
Thank you.
The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, first question is, what is the rationale for the mass shutdowns in Morbi? What is it that they're trying to achieve?
Okay. I think this, if you see across the world, we have 21-day to 1 month shutdown. If you have China, let's talk of the 3-4 large economies which produce tiles. I can only compare the tile industry. China generally shuts down for approximately a month during Chinese New Year's, which is end of January to end of February. If you look at Italy and Spain, which are very large producers, shut down during the month of August, which is their summer. And they generally do the routine capexes, the routine maintenances, etc., at this time. So I think Morbi is trying to follow the same, but I think it's been exaggerated. The situation is exaggerated because of the lack in demand. Although the demand and exports have gone up, but the lack in demand and the extremely high gas prices, where they are not able to pass on the prices, especially the smaller ones. What they're trying to achieve is to create more demand by taking out 1 month of production pretty much every year. So they want this to become an annual feature, And if it does become an annual feature, it will probably be quite decent for the industry, because everything then gets planned. And maybe some of our plants which we do ad hoc maintenances, we could also fall in line and do the maintenance at the same time. So I think if they do succeed 2 years in a row of this shutdown in August, and why August? Because generally in Janmashtami, there are 2 times which Morbi generally shuts down for approximately 7 to 8 days any which ways. One is Janmashtami, and the other one, because in the Gujarati community, Janmashtami is a big one, and the other one is Diwali, which is soon after followed by Bhaiya Dooj and then the Gujarati New Year's. So these are the 2 times of the year they generally shut down. August seems to be a better month because there's half the India is under monsoon, and there is Janmashtami. So from that point of view, they have chosen this month. Good luck to them. If they can, then a lot of the organized industries will also follow suit, maybe year 3 onwards. So that's exactly what they're trying to achieve, create more of a demand by taking 1 month out of the calendar. So automatically that many % of the capacity goes out. So create more demand, and also hoping that there would be certain price increases when they start operating. This is what they're achieving.
That's brilliant. So my second question is, just wanted to get some sense on the fuel costing, what Gujarat gives if you have a MOU, if it's on spot basis, and how does it compare versus propane after including all the taxes? That's the first question. And the second question is, how is our costing for different regions, basically for the quarter and currently?
Yeah. So, we have contracts with Gujarat Gas. Those contracts are 3-month contracts, unlike the contract which we have in our northern plant, which is a 20-year contract. So there are 3-month contracts, and the pricing they give us is a blended pricing. We don't have exact BI as to how they price the gas, but they price it between spot gas, RLNG, which they're buying from Qatar and various other areas, and also some amount of APM. So a blended cost, to give you an example, currently in Gujarat is approximately 65 rupees a standard cubic meter for the RLNG which they're providing to us. Compared to last year, same quarter, it used to be 36. Let's not even get into what it's gone up from. So it's from 36 to 65, it's obviously gone up slowly and steadily. Even on quarter, it has gone up by 3 to 4 rupees. As far as propane is concerned, currently propane is approximately 7 to 8 rupees a standard cubic meter cheaper, and a lot of the plants are converting to propane. Obviously, it has a large capex. And smaller guys may not be able to afford it, but for example, for some of our plants are moving to propane. It needs the yard, it needs the permissions from the authorities, and it needs a capex of approximately 1 crore plus. So 3 of our plants are moving in this direction. 2 have already done it in the last 10 days. 1 is en route by month end it should be done. So from that point of view, we are also moving whatever we can into propane. On the other front, in the northern area, our gas price used to be the same, 36 rupees, same quarter last year. Today is approximately 58 rupees for the quarter, and if we speak as of today, it's approximately 64 rupees a standard cubic meter. So as we speak in August, it's 64 rupees, same as Morbi. In the south, it used to be 34 rupees, same quarter last year. Last quarter ended, what we are discussing, the result was 71. Currently, when we speak, it's at 90 rupees. So very, very significant sharp jumps in all of the gas prices as we speak.
Sir, just last question, I'll just try to squeeze in. What percentage of capacity in Morbi it has already moved to propane? Is it significant to adjust the cost curve for somebody who doesn't move to propane? Will it be at a disadvantage?
So look, approximately 130-40 plants have moved to propane, and what I believe is that 150 plants would finally move to propane. So it's not going to be a very, very large amount, considering there are 800-900 players there. Some don't have space, some don't have the ability, some don't have the permissions, etc. And I do believe that with every passing day, if gas prices start numbing in the next 3-4 months, it will make less and less sense. So I think whoever had to move, other than the 20-30 more players, most of them have moved. And for them, it will be an advantage. So for example, our plants which have moved to propane, we will be producing tiles at a 60 something rupee level, 58 to 60 rupees standard cubic meter level, whereas the other people are producing at 65 to 67 rupees the standard cubic meter level.
Great, sir. This was very, very useful. Thank you so much. Wish you good luck.
Thank you so much.
Thank you. Anyone who wishes to ask a question may press star and one now. The next question is from the line of Keshav Lohati from HDFC Securities. Please go ahead.
Hello. Hi. Thank you for the opportunity. So, what percent of the Morbi will be shut down for this 1 month?
What we hear is that the total, approximately 50 to 60 plants will keep running, and I don't have BI as to how many have already shut down and how many are going to shut down as a result of this March shutdown. But there are about 800 something players in Morbi, out of which 60 to 70, maybe 60 would keep running, provided the transport strike is not a very stringent one.
Okay. Understood.
So just to a very quick math, we have about 8-9 plants. Industry leader has another 8-9 plants, and other organized players put together have another, let's say, 15 plants. So that's approximately 30-35 of us, and then there are approximately 3-4 very large players there, Morbi standard large players. That's another 40, and then another 10 plants which are making slabs. Slabs mostly get exported, and another 10 plants which are 100% export oriented. Not a single tile goes into India. So all of these 60 plants have no reason to shut down, and they have not even put their name as a consent on this March shutdown, which is very well known to Morbi. But this transport strike is a new one. We're hoping it doesn't happen, and even if it does happen, it's a 2-3 day strike up till Janmashtami, which anyway is a muted period. If let's say everything was going okay, normal, between 15th August and Janmashtami anyway is going to be a muted period. So if that's the case, I think those 60-70 plants will have no issue.
Okay. And how has been the gas prices region-wise in North, West and South in Q1 and current prices?
I didn't understand. I'm sorry. Can you repeat, please?
What is the gas prices for Q1 in North, West and South, and also the current price?
I just mentioned that the gas price in North is 50. Q1 was 58, Morbi was 65, South is 71. The North has gone up to 64, Morbi has gone up by 2 rupees to 67, and South has gone up from 71 to 90.
Okay. Yeah. Thank you. I wanted the South number. That's it from my side.
Thank you.
But mind you, in the South also we're trying to acquire gas at slightly cheaper rates from third parties. So we've already been able to succeed for a small amount. We should be able to secure some larger amounts. Not obviously substantially cheaper, but cheaper than the current rate. So we're trying our best to see how you can get that. And this is again for the next couple of months. Hopefully after that it should start getting muted.
Thank you. The next question is from the line of Asim Bhade from DAM Capital Advisors Limited. Please go ahead.
Yeah, hi, good evening to the two of you. I just wanted to check if you would like to talk about any margin expectations for the rest of the year, assuming gas prices stay where they are and your value-added mix moving up.
Yes, good evening. So as I mentioned in my opening comments, with these 3 plants going on stream and value addition coming up, if gas price remains at the current levels, we should see certain margin expansion. I'm unable to give you a figure right now because it is extremely volatile, but at steady state it should be a small margin expansion for sure because the value added sales would have kicked in.
Mm-hmm. Okay, but still, I mean, that's what I wanted to check, whether is there any number in mind for the rest of the year, assuming things are stable. But okay, sure.
Wouldn't want to give a number, it may be too early. Maybe next quarter, if things stabilize, we should be able to, give some guidance. And the reason why I say that is because generally gas price moves up again in the winter months. So, early days to say, it's so volatile over there that it will be really futile to give you a number and then people forget everything else and just put that.
Yeah, that's understandable. Yeah. No problem, no problem.
Just at steady state, I do believe there will be a margin expansion. So let's talk of this quarter. This quarter there should be margin expansion because I don't see any surprises of gas prices in this quarter. Who knows what will happen next quarter?
Fair enough, sir. Fair enough. So on GVT, you said 30% of revenue in Q1 is GVT, and that can go up to 33% in Q2. Where can it settle off by Q4 end? And maybe FY24, where are there any further levers to keep it? Sorry.
Yes, no, absolutely. I understand your point. Sorry to cut you off, but I think closer to maybe 33 to 34% by this year end, maybe a little more. But next year we're putting up the slab plant, so that will push up by another 2%. So I think the 35 plus figure would be there by middle next year. Maybe if that would be the minimum, it would be probably more.
Got it. And is this the value-added mix as well, or is there something more to add to it?
No, value-added mix, that journey keeps going. I mean, it's a work in progress. So that value-added mix will keep coming up. And that new slab plant is 100% value-add anyway. And for that matter, even our Kadi plant is 50-55%, maybe more, 60% is value-add. And in the south also, the GVT expansion which has happened, approximately 50-60% is value-add. So obviously, when you start a plant, you start the plant with your basic material. Why would you make a value-added material? And there are issues in the first 15-20 days of any plant starting, any greenfield plant starting. So value-added mix has started coming up. You'll see that figure when you analyze our Q2. You'll see half of Q2 would be giving me a good flavor of that figure, and the full of Q3 and Q4 will give me a good flavor of that value-added mix. Okay. And by that time, we should be ready with the slab plant. Like I said, end of first quarter, beginning second quarter, we will have the slab plant in Morbi, which will also further augment our value-added mix.
I think just one clarification, whatever this percentage we are talking about, this is percentage to total tile revenue. So don't replicate this to total revenue because that comprises 10% of non-tile as well. Right? Understood.
I was actually talking about the tiles part only, but okay. Thanks a lot, sir, and congratulations on a good performance in Q1.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants to press star and 1 to ask a question. The next question is from the line of Sneha Talreja from Edelweiss Securities. Please go ahead.
Thanks for the follow-up opportunity, sir. Just wanted to understand two things. One is the decline in other expenses on a QOQ basis. I think on the opening remarks, you also mentioned that ad spend has seen some decline, which is usual in Q1. Could you give some other reasons also along with ad spend? What has been the decline in Q1?
Yes, hi. So that's, I think it was fairly covered in opening remarks as well. That's obvious certain expenditure which, comes towards the end of the year as we progress. And that's largely the A&P part of it. Though we have been maintaining and it's roughly 2-2.5% type of range. And that we have been consistently doing for this quarter as well. But if you compare with the Q4, I think the difference of roughly 4-5 crore rupee at a standalone level is that much on.
Okay. So it's largely due to ad spend.
Yeah.
Also, I just wanted to understand your depreciation part of it. Despite the new plant coming up, we have seen decline in your depreciation. Any reasons for that on a QOQ basis?
So actually, Q-on-Q basis, it's aberration. Q4 was aberration, to be honest, because there were certain, machinery and equipments which were flared up because of modernization and all these things. That's why Q4 number is not the normalized one. The number what you are looking for the Q1 and even the previous quarter, that's the normal one.
So this quarter has a meaningful decline number. Like Q4 should be a normalized average run rate that we should look at.
No, not exactly. Q4 is not the normalized one. This quarter, even the earlier quarters, Q2, Q3 was the normalized one. Q4 was not normalized because it was flared by certain amount because of the certain equipments getting, written off for replacement under the modernization scheme of Northern Plant.
Understood, sir. Yeah. Thanks a lot, sir.
Thank you. The next question is from the line of Pranav Mehta from ICRA Securities. Please go ahead.
Yeah, good evening, sir. So just wanted to understand your thought process on selling out of one of the GVs in Morbi, that is Amora Ceramics. So what is the strategy behind this? And just a related question on this is that is ceramics as a product category being expected to gradually lose out to vitrified tiles, and that is the reason why some of the organized players are more now focusing on outsourcing of ceramics instead of, let's say, own manufacturing and JVs? That was my first question.
Yeah, thanks for the question. I was hoping that question comes up. Even I forgot to mention it in my opening remark. But so we had two JVs. We had Amora Tiles and Amora Ceramics. They were right next to each other. The reason for putting our Amora Ceramics as a separate company at that time were certain benefits which we were getting for putting up a greenfield manufacturing. So one was producing 4 lakh square meters of tiles per month, and one was producing 2.5 lakh square meters of tiles per month. So the total capacity between Amora Tiles and Amora Ceramics excuse me, was 6.5 lakh square meters of tiles per month. We never got on to use 100%. We were only, when we put it, we were using more than 4 lakhs, but we never could use 6.5. We could only use 5.5 lakh square meters of ceramic tiles from there. After which we expanded the Qatar capacity, and we are also trying to tie up certain capacity in South, which we are currently not fully successful with in the wall tile segment. But the reason for this divestment is that what we are doing is we have added capacity. We've done balancing equipment to the tune of 10 to 12 crore rupees in Amora Tiles, which is the original joint venture from 8 years ago. We have augmented capacity in that, or rather we would have augmented capacity by November, that will go on stream soon after Diwali, from 4 lakh square meters to 5.5 lakhs. So that is what we've been selling. So what we were trying to do is get 100% capacity utilization from that one plant, which is 5.5 lakh square meters, which we are confident of selling, and we are already selling, and divest Amora Ceramics, which is a 2.5 lakh square meter plant, and our partner was able to sell that in exports in various other areas. So they have gladly agreed to take that back into their 100% into their fold, and simultaneously add capacity in the Amora Tiles, which again is the same partner. So they have also put in their money in their own share to augment capacity for 5.5 lakhs. So as far as Somany is concerned, we are not going to have a single square meter which will go down. And even in Amora Ceramics, which we are divesting, first right of refusal for any incremental capacity will be ours. So this is the reason, and thank you for asking the question. And the second question is ceramic going down? Ceramic is not going down as fast as PVT is going down. Polished vitrified tile is going down further. There will be a reasonable balance, which is what we've seen in Italy, Spain, China, everywhere, between ceramics and GVT. Obviously, GVT came from a very low base. So GVT, we see it as a very fast-moving, fast-increasing segment. Sorry. So from that point of view, GVT also will start tapering off because it was on a small base. Now that the base has become larger. So I think there will be a healthy mix between GVT and ceramics, more in favor of GVT, because ceramics anyway was limited to kitchens, bathrooms, etc. even earlier. There it is still the preferred product. So PVT has gone down. Why more people are outsourcing? I think that is something which I had mentioned earlier. In the South, some of the organized players have gone and tied up capacity for ceramics. I think we were just a little too late to catch that boat, but never say never. So we are also trying to get capacity. For example, we have been able to tie up more capacity for ceramics and GVT in the north very recently in the end of July. And we are also tying up some capacity within the next 1 month in south for ceramics. So it's not that ceramics is going down or anything, and the divestment is very strategic. It's a win-win for all. My plant, out of one plant, I need more than 4 lakhs. It will be able to give me 5.5 lakhs. And at 100% capacity utilization, you may appreciate that the gas efficiencies become also that much greater. So it's a win-win for all of us. I hope I've clarified the question.
Yes, sir. Thank you very much. And sir, your guidance for bathware segment growth, and now with new players also coming into the bathware segment, and most of them are now targeting for outsourcing of capacities, I believe it would be mostly from Morbi and Thanjavur areas only. Do you think there is a possibility that there would be shortage of capacity in bathware segment, particularly in sanitaryware, because Indian exports are also going up quite well for last 2-3 years. So your thoughts on the same?
Yeah, so we still have capacity for 1 year, and we also have outsourced capacity. So I don't think capacity is going to be a constraint in bathware immediately. As far as our growth is concerned, we had said between 35 and 40% growth, and I think we're absolutely on that figure. We should be able to achieve that. And as far as our faucet is concerned, I mentioned in my opening remarks that we've done some tinkering, balancing equipment. We should double our production.
Sure, sir. Thank you very much.
Thank you.
Thank you. The next question is from the line of Vinit Shah from Shah Group. Please go ahead. Mr. Shah, I have unmuted your line. Kindly proceed with your question.
I have a question on similar lines from bathware segments. So with this big players, Asian Paints or Astral and Jaguar, all these players, so what is our right to win in this segment? And this is my major question. Other question you have already answered from the bathware segment.
Thank you. No, this has been asked in the past also. Thank you for your question. The right to win, I think the confidence is that everybody has their own set of dealers. We also have our relations for the last 50 years with our dealers. If you see currently, we've not even scratched the surface. We have approximately 2,900 active dealers and about 3,300 direct dealers, which then sell to approximately 10,000 sub-dealers. If you take even the 2,800 and something, so ballpark 2,900 figure, not more than 350 to 400 dealers are still keeping our sanitary ware. So long way to go on that one. And specifically to provide our product to all the shelves is where we believe that we would be able to become even more successful. And I think our journey has been quite successful till now. And if we see the demand from the market, our products are liked in quality, our products are liked in the variety. The variety only keeps increasing as we grow. Pricing is also, I won't say cheap, but it's competitive compared to industry leaders in that segment, which is the Roca, Kohler, Hindware, Cera, etc. So from that point of view, I think we are okay. We still have a long way to go. Unlike the tile segment where 80% of our product is retailed and the 20% is between government projects and private builders, over here still approximately 50-60% of our products, 50% of our products are in projects. So we're not still as strong in retail, but that obviously will be the fact that it's still not recognized as a sanitary ware brand. But with every passing day, we are, overcoming that fact. And there are also, just to preempt another question, we are also planning some mega launches of new products in the coming quarter for the sanitary ware to build more awareness for the our product line. So that's where it is. And as far as Jaguar is concerned, I think they've been in the sanitary ware bath fitting segment for very, very long. Astral is a new player, and there are 1 or 2 more players which are coming up. Asian Paints again is somebody who had entered this space approximately 4 years ago, 5 years ago with the faucet plant, and they've now started also sanitary ware in a very small, humble way. So I guess the other way to look at it is there are very few players for the last 30-40 years in the Indian bathware segment, and now suddenly it's heating up. This area is also heating up.
Okay, and I have one follow-up question regarding the dealership. So usually I have seen like faucet wares are usually sold in hardware stores, and where tiles and these things are sold separately in different dealerships, right? So how are we targeting any new sellers or something like that?
Let me stop you here only. That's not true at all. If you go and walk into any tile store, bath fittings, sanitary ware and tiles go in hand and glove. It's the geysers which have 2 segments. They have our segment and they have the hardware segment. But beg to differ there, sir. The faucet segment is sold from the tile dealership only.
Okay.
So what you may refer to is the accessories. So certain if you used, everybody uses faucets. So if you see under your basin, there are those two knobs for hot and cold, which keep getting spoiled. Those are little things which the plumber may buy in a hardware store also. They call a bibcock. But otherwise, those little small items are sold from a hardware. But the basic, your shower cubicle of the lever over there, and your main faucets and your health faucets, those are 99% sold out of tile shows.
Okay. And considering the fact, as you mentioned, 50 to 60% is in project. So, like, what is the return on capital employed we are looking at in this segment, in the longer horizon, not in a short term?
I couldn't understand. I'm sorry, if you could repeat.
What is the return on capital employed that we are seeking in this bathware segment in longer term?
So, return on capital employed bathware segment is definitely on a higher side, considering it's a margin accretive business as compared to tile on a blended level. And but since it's a part of the same bigger company, so difficult to dissect precisely the capital employed percentage for it. But in general, for us, the asset turn is also higher and margin is also on a higher side. So, and these two are the only function for a return on capital employed. So directionally, we can say it's a higher as compared to tile.
Okay. That's it. Thanks a lot.
Thank you. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity.
Yeah, hi.
Yeah, hi. So my question is, on one is sourcing of fuel in South. Can you provide some more color? The reason I ask this is, if one looks at the headline numbers for costing in South for the fuel, we are on a higher side versus the largest player. And in fact, we are at an advantage in the other regions. So just trying to understand the differential, if it's possible.
No, that's not true. Our prices is exactly the same as other players in the South, unless they're running on coal. So all the organized sectors, industry leader, ourselves, we are at exactly the same price. There's no difference.
Okay, I'll connect to you offline for this. So that's one. And so second, some quantification if you can give on the trend in exports out of Morbi, and if Morbi is say shut for a month, what happens to the export trends? And secondly, is there any disruption in the global seaborne trade because of Italy and Spain probably facing issues on fuel availability or even viability issues over there?
So export, if you see, America, which used to be zero, has become the largest importer from India. So the single largest export, which is now happening in terms of value, I'm not sure of the volume because I generally get only value figures from customs, is now to the US. Earlier it used to be to the GCC and Saudi Arabia specifically. So now Saudi has become number 2 and US has conceded that space. So the exports is only going up, and in this 15-day outage, I believe there is certain amount of stock, at least with the export-oriented players, which will keep going. But otherwise, I really don't know how they're going to manage, other than the 100% export-oriented units. If the units close down, how they're going to manage the export commitments. Obviously, they must have thought of something from Morbi. There would be a small disruption anyways, but overall, the export for India, as mentioned in various forums by all industries, all industry leaders from our industry, we're looking at exports of between 17 to 19,000 crores. So last year was approximately 12,500 crores, which if you annualize, considering we had 1 month of the Delta shutdown, it was about 13,500 crores. Which this year should be anywhere close to 17 to 19,000 crores. So exports is something which is looking good, and this is, mind you, at a situation where freight rates are still high. Obviously, freight rates have started numbing, and we do believe in the next 12 months it will be even better. Exports will be a huge plus point for the Indian tile industry.
Sure. Sir, last question, if I just may squeeze in. Sir, how should one look at the channel inventory right now, given the Morbi situation? And secondly, any color on the price increases if you have taken from the start of this quarter?
We did take some price increase in April and then in June, approximately 2.5%. But whenever we've taken a price increase, it's been eaten away by an immediate subsequent gas price increase. As far as Morbi is concerned, they are hoping that there would be a small price increase after this shutdown.
Right. And channel inventory?
Channel inventory, nobody in the dealership is overstocking material. Even now they're not overstocking because they've seen Morbi only reduce prices in an increased input price scenario. Not really reduce price, but giving better discounts to remove some old inventory, etc. So the channel inventory pretty much remains the same. Maybe it would have gone up a little bit in the last 1 week, or as we speak going up, because everybody knows there's going to be a 15-day shortage from Morbi. So they must be stocking up. But mind you, a lot of those channels don't really deal with us. So the Morbi channel industry may have gone up a little bit, slight bit in the last 1 week, or is going up in this week.
Sure. That's quite useful. Thank you so much, sir.
Thank you. Anyone who wishes to ask a question may press star and one on their touchtone phone. Thank you very much. As there are no further questions, I would now like to hand the conference over to Mr. Somany for the closing remarks.
Thank you so much, ladies and gentlemen, for joining us for the earnings call of Q1. We hope to welcome you for the earnings call for Q2 and hope for the best quarter. Thank you so much.
Thank you. On behalf of SKP Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.